Greetings, market rebels, and welcome to this week's sector situation. I'm Wayne. My partner Ryan is working on the market outlook for this week, which will be coming out a little later today. It's about 12:30 Eastern time on November 6th. We have a typo, 2022. Let's get moving on the sector situation. And there's our trusty disclaimer. And here is our trusty intellectual property rights notice. We'll take a quick glance at that and we'll get started on things. So I did share a little bit of the sector stuff in the macro measure this week because I thought it was important. I have to find a way to simplify all this stuff, but I'm still working on that. So for now, I'm just going to try to share things I think are important in the major macro picture and things that are important in sectors. And the sectors have not been acting very independently. Most of them have not. We've made the exception for XLE most of the year. A lot of the rest of the time, it was risk on, risk off, and they were pretty much treating everything similarly. But I think we finally have a situation where it's gotten interesting again. And it's interesting from, I think it more of like an intermarket analysis, maybe macro picture to some degree too. But you can see the communications stick out down here pretty poorly, right? And you can see that the technology really finished the weekly, but they've got the highs taken out there on XLE. You got to go back to this high, which they could then break out from right there. Possibly we'll have to wait and see. But that's certainly different than what we're seeing here. And if you look through financials, XLF up here, they are also hanging in there. So are transports hanging in there. And even though, right, it was kind of a rough week, XLV, healthcare hung in there. XLP, that hung in there. That's been hanging in there. Discretionary, a little bit rougher stuff, not acting as well. Right, you can see, of course, all the current daily RSI readings on all these, and we're, other than energy, right, we're really not near, very close to, I should say, overbought, which is 70 theoretically, technically, in most of the sectors that we've got here on this 12 sector grid. Real estate kind of finished the week a little better. You could see we're making you've got a higher low here versus this low back here, and then you've got a higher low versus that low. So a little bit of constructive stuff, here at XLU. But I think the big story for me has been these two, the basic materials and XLI. And those, along with energy and this XTN, I should mention, hanging in there, I'm starting to think of that as being really interesting because it seems as though, and I don't know, this is the hard part about this. I don't know if this is the China rumor, China coming back online and they're loading up on that for that reason, or right, there's somehow they're seeing something that maybe I don't see because I don't have the depth of research and width of research, breadth of research that they do. That something's going on, that some of these economic issues around the globe are going to get cleaned up a lot sooner. But industrials and materials acting well the way they have, maybe the expectation is that money's going to flow better, which is always a good sign in your economy. Financials acting a little bit better. This is not acting horribly, right? And then energy, which drives all this stuff, is also acting really strongly. So those are acting much better than a lot of other things. And the problem that I have right now is that I have a hard time believing that that's sustainable, right? I'm thinking, look, I'm objective about they're acting better, but I'm thinking, how is this really going to play out? I just don't see these areas being able to pull this off. But again, that's what can make trading so difficult for us, where you try to reconcile what's happening with what you really think should happen. And under no circumstances right now do I think everything should be going gangbusters to the upside, especially a lot of those sectors we just talked about. But could they? Yes, I definitely have to acknowledge that. And I have to be respectful of the fact that this really closed at the highest closing high for the week in the industrials, and so did basic materials. You know, there was this big move, I think, in I want to say that was in copper. There's a lot of strange stuff happening, and I don't know if it's that there's trouble with physical delivery on some of these things, even in the precious metals, which we'll talk about. So it's really become very interesting, and I don't know how sustainable it is. And if I look across, and I'll do this more, well, let's take a look at, let's take a look at one little item first, which is right here. A couple quick items. I mentioned this in macro measure. I mentioned it on cocktail hour, but you can just take a look at this. This is why I'm really trying to suggest that folks remain prudent as we get into the election fallout, and then the CPI, I think, on Thursday morning, because there's going to be a lot of the trading year left. And as a lot of you know, the seasonality is about to kick in and supposed to kick in for bulls. And this is all years. These are all midterm years. You can see that things end typically, right, end the year on quite a high note overall. Now that's supposed to be kicking in. And I don't know if this is true, getting back to what we were looking at, but even after Thursday morning, which I think Thursday morning will be what, 7, 8, it'll be the 9th. So there'll be still 2/3, right, of, no, will be the 10th. I think it's the 10th then, but there'll still be 2/3 roughly of November, and then all of December to trade this year, right? So even if they start a move out, big to the upside, big to the downside, whatever the case may be, there should be still plenty of opportunity. We don't have to worry about FOMO. And you can take it, don't take it from just me, right? Take it from Paul Tudor Jones, because he's obviously a lot more successful and big time, right? And recognizable. And so look at that, he's got that right there. And I think that's really where I arrived at too. I mean, I think a lot of people that trade arrive at, unless you've got a really good reason to place a bet in front of one of these possible binary outcomes where they jam the market or they slam the market, you're better off just waiting for that move to start unfolding. And then when you have confidence in it that it's going to sustain, then become involved rather than getting yourself in trouble prior. So again, when in doubt, sit on your hands, but look what's supposedly coming our way if the historical seasonality plays out. So just keep that in mind. There's a lot of potential. We don't have to be right all in on by Monday afternoon, and then deal with Tuesday, Wednesday, and Thursday volatility. You can wait it out. So having said that, let's bring up a solid chart that's more basic that we can look at. And I'm going to go through the sectors here by starting out with XAU. Now, XAU, let me just, what I think I'll do to help us out is I think I'll move some of my sector stuff over so we can go through the main things we look at methodically. But if we look at the XAU to get started, because I'd like to cover the other few sectors we do look at first, XHB, SMH. This is interesting because silver's made a move. They're starting to work this, because it's been just hobbling along for so long. They're starting to make this stuff look a little bit better, I think. Right now it's sort of like, it's hard as someone who wants these metals lower for personal reasons. This is hard to ignore. This is looking interesting. And if there was some serious papers that started to show up in the precious metals names and it was bullish, I'd feel, not only would I have to, but I would feel as though I needed to, right? Because it looks good, that there could be a little bit of a pop at the very least. So I would be interested in putting that paper in, but I think this is starting to get a little bit more constructive, and I wouldn't ignore that. So I would put that on your radar, that things may finally be getting a little bit better there. Clearly, you're going to want to see all these highs get taken out here. But if that happens, right, then you may really be off to something. These two lows, single one-off here and this kind of cluster low, both higher than this low. And SMAs, the shorties, short terms are rounding up, and they're starting to overtake the 100 right there in white. So keep an eye on that. That is interesting. Again, that's another sign, sort of, right, because there are some industrial uses for this stuff, not just as a store of value or whatever, hedge against inflation. So keep an eye on that. You've got the XHB, right? And so this is one that makes no sense to me, like how anybody could possibly want to start buying this sector right now. I think there's a lot of fallout that's yet to hit the tape. It's just going to be, and I don't think it gets reversed anytime soon. So I would not be a big aggressive buyer on the long term here, but I would be willing to take a trade in either direction, of course, mainly right bearishly, but still, if it starts shaping up. This one, nothing special at the moment, right? You're below effectively every SMA. You're kind of flatlining for the last, say, month or so, month plus, and you need to start doing something a little more constructive to get ready to go be a bull at the very least. I would probably wait till the 50, frankly, unless I had to do a really short-term trade, at least the 50 there in gold. But again, if this attempt to sort of consolidate and bottom out rolls over, then I would be inclined to think this thing, given the macro situation, given where rates are, given how that's just absolutely throttled the new home construction market and so on and so forth, I would think that this still is in trouble as of now, right? As of now, but it's kind of more towards the neutral side. Even the RSI, which is, let's go over that. RSI itself is at 47, rounding it off. So right near 50, which is right in the middle, right, of the RSI range. So that's that one. SMH is another important one that we look at on a weekly basis. And tech is obviously struggling, big tech, but we have to say, look, right, this is a big move. It got through this resistance that we were charting. Give it its due, right? It came back, tested that, found support right near there, a little below, like the gang always likes to do, chase people out that are trading the breakout, pull back to resistance, hope it converts to support. Then they've got it going again. But look, all it would take to take out the 50 and the highs here would be just a little bit of a move. And that could open up more to let it go up towards the 200 and things like that. So you have to say, okay, Apple and a lot of the other big name stocks are really struggling, but as of right now, this is acting better. I would say, look, if it takes out the high and the market's showing you risk on at 195-ish, and it doesn't take forever to get there, and it's sort of kind of a fresh breakout, I'd be willing to go with it. Again, keep in mind CPI's Thursday morning. And at the same time, if it's risk off and they're whacking this low and it's being taken out, that means another rally attempt has failed and it's hit the wall at the 50 or what have you. And then I'd be willing to talk about a retest and then see what happens from there, because it just doesn't sound like Powell is ready to pivot as the market keeps trying to sell everyone, or I should say FinTV keeps trying to sell everyone. It doesn't sound like that pivot's all that close by. Let's look at these a little bit more in depth. XLE first. We're going to run through our mix. And I may just take this down to 6 months so that we can work with X, because it's sort of Thinkorswim sort of getting under my skin again, like it always does. It always does every time I start recording. It's got an issue, but weird, because I just did the Windows 11 install. Things are running really smoothly with that kind of clean install, and I don't know why this is getting wacky again, but it is what it is. Anyway, you can see how close we are to those highs. It's not very far off. Nice strong run. They've been consolidating here now. I'm not so worried about being outside of the Bollingers, because because this has been consolidating, they're not really super wide. They're more on the narrow side. And so breaking out above those, that's going to happen, right? If there's a really strong trend and it's a longer term trend that's unfolding, which it seems like there could be in energy. Now, remember, like, this would be good for energy. Theoretically, it's a good sign for the economy, but maybe not a good sign for consumers, which are the economy, right? So that's the problem. It's a good sign when energy is acting well, but again, it has its own unique reasons. So you got to keep that in mind. But look, it failed to break out and go here, and they reversed it. But I think you have to keep your eyes on this. If they break this thing out after consolidating, I do think we could have another leg higher, which again, to me, would be inflationary, that if gas prices head back up, which they seem like they will, and then B, that's going to factor into hurting the consumers, right? So that creates at least short-term inflation. Long-term, it kind of kills demand for other things in my book. But I have watched CNBC, and many, many years ago, they made the argument that during the same year, they made the argument that gas prices going up do not affect the consumer negatively. and gas prices coming down put more cash in the consumer's pocket. So it is what it is. I think it affects it. It's not only bullishly in my book, but what are you going to do, right? MTV's there for a reason. XLF financials here. Again, you got to say, okay, I think this is another one of these situations. Gets up just under the 200 there in purple and it's going to fail. I wouldn't argue with you, but let's wait for it to fail before we start to get wildly bearish on it. Right? Let's see it lose the rising SMA support of all the 10, the 15, the 20 there in white, red, and blue, respectively, the 50s down there in gold. But let's see something reverse, because as of Friday, this is acting a little bit better, right? You've got to give it a little bit of credit that this is acting a little bit better. So in transportations, I'm kind of going out of order here, but that's okay. These are the important sectors in my mind: energy, financials, transportations. This is also looking a little bit better. Let it take out the low in a risk off where the market doesn't like the election outcome, or something's funky about how things play out, and it creates more consternation in the country, because that's what we need. And then, or the CPI or whatever the case is, but let it be risk off, and I'd be ready to go short there. If they have risk on and they're jamming things and trying to spin this, look, if it breaks out from here, there's plenty of gaps that this thing's left on the way down that it could fill. And remember the seasonality, right? Remember that that's coming up. You have to keep that in the back of your mind, that if it were to go back up right now, the market that is in a lot of these sectors and names we discussed, that wouldn't be out of the question, that wouldn't be out of character, it probably would be more in character. So it doesn't really make sense to me either. I don't know how, I would personally not be positioning for the long term at this point in your basic stocks or mutual funds. And if you wanted to say I'm dollar cost averaging, that's a little different. But if you say I'm going all in here, I wouldn't be with you. I wish you luck, but I'm not going to be with you on that. I still think there's a lot more negative stuff that's going to hit this tape in the future about where things are going. But remember, they've got that seasonality, and nothing's more important to Wall Street than benefiting themselves. And if they can make this year not look like the atrocious train wreck that it is and make themselves look better, they're going to do it. As I said in macro measure, and I hate to beat this horse, but a lot of people tend to overlook this. If they have enough success with a rally, and then that puts pressure on people who are not long, because they're now like, oh no, I'm falling further behind. I could have made some of my losses back. I better get involved. That can create this self-perpetuating kind of market internals plumbing rally that's nonsensical, but I've seen it way too many times to not try to help by mentioning it. So ask about that in one of the webinars this week or whatnot. And if you are unsure, I'll try to expand on it more. Let's take a look at XLC. XLK, I don't want to jump too fast. XLK, this is what I mean. A lot of the big tech, right? Not necessarily right in XLK, but this is that just overall tech. And we know how big tech's been acting, which has been poor. This did not really have a good week, right? It's still above the lowest low, though. It's still near, right, the low levels that it's supported before. So again, I'd say, look, take South Friday's low, risk off market, going for the retest of this low. Again, if all the data is out for the week, if they start taking it above here, I'm waiting, right? I'd rather not jump in too early. If you tell me I watch every tick, Wayne, I'd say fine, get in. That's fine, right? If you're all over your risk management every minute, every second of every day, that's fine. That's what we all did too. But because you can't hate the candle there, right? I don't think. And I could see it working its way back up to the 50. But if it gets back up to the 50 and you're in a little short-term trade that you manage like a champ, I would definitely take most of my risk off if the election fallout news hasn't hit the tape to that point, or if the CPI news hasn't hit the tape to that point, because you just don't know. But overall, XLK not acting well. XLC, maybe one of the poorest of them all. XLC made a new low, I think, for the year, I believe. Let me double check on that. I hate to go out further and get screwed up by, nope, there you go. So you all know this. This is affected by Google. This is affected by Meta, and you can see that's just an absolute snap and things like that. So this has been rocked. I mean, this just got crushed. So if you want to say what's the cheapest thing out there that could dead cat, maybe wait for this thing to work its way back into the Bollinger Bands like it did here, little pop, like it did here, bigger pop, get that counter trend trade going, more power to you. But it's an awful area right now. And usually things that are acting poorly, if it stays bearish because they don't like what comes out of these elections or CPI or both this week, and somehow the seasonality gets overwhelmed, then I would not be willing to go along that thing. Would I say it's the early innings of being a bear? Clearly not, right? I mean, a lot of it, but it's never too late to, it's never too late in most cases to, when there's a larger bear market unfolding, to keep really not forcing it, but still milking the downside, because things generally fall further than most people expect them to. Here's your XLV, your healthcare sector. Again, another one that I would say you have to give it its due. It's acting better. I think a lot of negative stuff's gone down, to kind of use some slang there, over the last few months. And yet this is closer to the 6-month highs than it is, right, the 6-month lows that we're looking at here. So give it its due. It's above all the SMAs. I'm not doing anything prior to the big news items coming out this week. But at that point, I would take out the low there, and I would at least probably at this one, I'd probably have to say there's a flat line right around there. You can see their closes at 130, call it 133 to pick a round number. That's a different story if it's risk on and they're jamming things back up through 133. XLP, let's take a look at the staples, and they've held up pretty well. That doesn't look terrible, right? You have a nice kind of basing action where it collected itself, put in a higher low, took out these highs here. So now you have higher highs, higher lows, SMAs all up sloping, all the shorties, long-term still downtrending clearly. So that's, I would always defer to the longs. In the end, they're the more powerful momentum, bigger picture cycles, but give it its due, right? It's very close to being back above the 100. And it could take another crack at this 200. So if the market goes risk on, it's not really in a great trading position, because you've got these highs that are right kind of all near each other. There's definitely a flat line there near 73-ish. You got the 150 barely above there in rust, and then you've got the 200 in purple. It seems like, wow, where do you get in there? This is one that I would have a hard time. If I saw some good UOA and I liked the chart at the moment, the market was acting well, I would be like, man, this is a tough one on the trigger, because I hate to trigger right below forms of resistance, right? That's not a great trigger spot. You want to get through that resistance, and then on a closing basis, ideally, and then get the inside of a good market environment that supports what you're trying to do, and then, right, put your trade on and be ready to go. But we can't always get that. XLY could be a double bottom. What leads to the discretionary double bottoming? Well, just technically, you could see that things are a little bit better as we check on some of our oscillator type indicators over here, RSI being one of them. So this is similar price action, but in terms of the price level, but a little bit better reading there. So that could be a good little sign. But again, at the very least, I'd wait for that 10-day up there to get taken out. And that's 142.24. So this closed on the poor side of that candle, and it closed on the poor side of the week. So as of right now, right, you take out the lows. If you want to be a little more patient and say, I need these lows to get taken out, or even back here, 133.04, that's all so close. I don't blame you, right? It's so close. You may as well wait. But if you want to trade the bull side, I would wait for the 10-day. And again, in a risk-on market, I would look for that to work its way up towards that 50, 100 area up there. Both of those are right in that area. And that's how I would trade that one for now. XLRE, real estate. Let's take a look at that one. We don't usually go through them in this depth, I know, but there's some interesting stuff finally happening. So I thought it was worth it. Sorry about the time factor. Supported at the 20. Short-term moving average is up sloping, a little bit better, right? Highs being taken out, higher lows being put in potentially. So keep an eye on that. That's what I mean. There's a little bit of nascent signs here. The things are actually shaping up a little bit better overall, I think, than they have. And that's why I need to be more neutral right now because the seasonality, all the charts are I shouldn't say all the charts, a lot of the charts are shaping up that way. And there's new sort of leadership emerging that's not big tech. And if that's the start of something, we don't want to overlook it because we're just dyed in the wool bears, right? That don't want to acknowledge that. But if we look at these things, this looks a lot better right now. I mean, you can see that maybe this does have a chance to go up towards the 200-day up there in purple. The way that it's acting, right? It's not, look at the overbought, oversold. It's not there yet. It's at 60. And even in the face of what was happening in, in big tech and so on and so forth, they not that that's directly related to basic materials, but they were like, I don't care, I'm buying anyway. So there's something interesting happening in XLB and XLI. To me, that's very interesting. It's almost like they're ignoring a lot of the stuff that I'm seeing globally that looks atrocious. But again, if it does go risk on, you're very close to breaking out there too. They could definitely start working that back. Not only is it above the 200, but they could work that back towards these highs and then see what happens. And so I don't want to be too bearish on things. And it just seems like the bulls are in XLI and XLB. To me, it seems like the bulls are more legit. Like it seems like they're not playing games to me for some reason in there. I can't really put my finger on it, but it's the complexion of everything, I guess, that's just weighing it on me from looking at this stuff for such a long time that it seems like they're really trying to make those work, or they really believe that those will work more so than some of the other things that have just rallied here and there. They just have a little bit more legitimacy to them. And I don't mean that they can't fail. I just mean that I'm kind of taking them a little more seriously than I would because they're counter trend right to the overall market trend. So I think I have to respect that because I feel like they're doing something here. Let's take a look at oil. Let's see what they'll give us here. Okay, we'll take a look at these. Sometimes Thinkorswim can get, there you go. And I think that's really a good chart. I mean, we've been waiting for this to start looking better because the XLE has looked a lot better at times than the crude futures, and they are looking better. I mean, I think you could see that, right? That you get this big, strong move, you get a nice pullback, holds for a while, starts going again, and then after consolidating and probably churning some people, it was acting pretty squarely there for about 6 or 7 sessions. It really stormed higher, and it could take out these highs, and you could be back up here towards a percentage. Thanks, Thinkorswim. All right, oops. You could be back up there towards the 200, 150 area, which is about $5 higher than here, fairly quickly, fairly easily too. And there's pretty good volume that came in there. And you can see this is all the RSI and so on and so forth. This is all looking better and acting better down here. So I don't know the specifics there. I just can't cover things because we're all so busy, Ryan, Greg, and I. But that to me is a very good looking sign right there. That's what I want to see if I'm, if I'm a bull in energy. I want to see that kind of action and higher low and maybe taking out highs after leaving a consolidating channel like that. All good stuff, if you ask me. But this stuff is notorious for. It's notorious for. What are they going to give me? LBS? Will that give me what I want? The energy is just notorious for. It's hard. It maybe isn't as difficult as metals, but it's not easy with all the different types of news that a lot of big players, I think, know well in advance before any regular folks do. Let's see if they'll let us use November. I guess we may have to use November because it wouldn't give us the overall sort of composite there. That's interesting that lumber futures have backed off to this extent, which is kind of like looking at the XHB. It's sort of back in line where the XHB is not doing much. This isn't doing much. And I think we were saying that we wouldn't really give this the benefit of the doubt because of our macro take on things. So, maybe you'll see like a little come in a little more wide double bottom action. We'll see. But again, I don't see anything there that's spectacular. that's telling me that, yeah, things are about to go on fire again in the housing market. I just don't see that. And I think it's worth noting that, because housing, the consumer, those things are just so important to the modern American economy, at least. And here's copper. And a lot of you may know this because copper made a big move, really big move there. And that was after basing for a while. We were saying we didn't see much happening there. We need to take out the high or the 100 or whatever. And it really did. And you could see there was a big surge. So if you're interested in that, now that's usually a pretty good sign. But that kind of a move up that many percent, 8%, right, in one day, I don't know what that was all about exactly. You'd have to look into it. But if this, let's just say this is legitimate, just for the sake of argument, if this is legitimate, it's a good sign. It kind of is in line with the XLI, XLB, all that kind of stuff. I just, something about it, like I would need to do a little research on the news front and see what's going on there. But, you know, if you've consolidated for this long, and we could do this, right, just to show sort of that, we show sort of that triangular action in here. You know, this is not crazy, right? That you really are approaching the apex of a triangle. Some might, you know, call that a descending, and probably more of a symmetrical. But regardless, it's not far from clearing some big highs, and it's been mired for months, right, in this sort of situation. So don't know if it's sort of something unique in that market, but right, if it does pull back, let's see if it can hold above, say, 354, 353, 354. If it does that and starts to go again, that's one thing. Or if it's just some kind of a short-term driver, this could keep going. I mean, I would wait for it to work. I think the 200 actually works out really well there, because it's right below this area and just below some of these other low areas. So that would be kind of like logical from a long-term charting perspective to tap the underside of that. Let me think about what else I could try to cover here. Forest and sector situation. I think we've covered it all. And I'm just going to finish by saying that a lot of the things we've covered, the big picture cycle stuff it's always off screen because it's just too hard to bring on screen and talk about it all. It would be very long videos, but a lot of the sectors that look good, they're starting to shape up better on these bigger pictures, right? So if you look at some of the weekly charts and you look at some monthly charts, this month is not over. So I don't want to get ahead of ourselves, but things are starting to improve as of right now. And we're only a week in, but all I'm saying is we have to look ahead, excuse me. And so if they finish the month out strong, some of that early good stuff that we've seen will have more legitimacy or staying power to it, in my mind, on the chart. And even if it doesn't really jive with how I think things should unfold, I wouldn't rule out that there could be 6 months or 7 months of sort of strength in an overall bear market that takes even longer to fully unwind. You know, we're only about, at this point, about a little bit over 10 months into it. So if you were to get, well, maybe not necessarily 6 or 7, maybe get 3 or 4 or 5, I don't know, maybe 5 to 7 months back of more constructive action bullishly against then another leg lower, which wouldn't, again, none of that would shock me. But all I would say is that's what I would sort of end on, that you got to look at these things in my book and say, you know, I don't want to get steamrolled. I'd rather be nimble. Have your hedging in place in your mind at least. Okay, well, I've got these positions on. I'm really still a bear. But if the gang starts to play shenanigans, I see highs getting taken out, levels getting taken out, I'm going to make these adjustments, nullify deltas, or at least neutralize deltas, or mitigate deltas, whatever you want to say, because they've got this in their favor. And usually, right, the Stock Traders Almanac is famous for this. Really late October through, I think it is May, is your best time for the market. And maybe, right, if there is like a political gridlock, there'll be a big justification for that through the financial media, that kind of a thing. But we have to say that things are looking a little bit better. And so you have to just be respectful of that. And it could all fall apart by the end of the week, really, because if the election turns out to be some kind of an ugly outcome with a lot of controversy or something. The CPI is not off a little bit from, I think they think it comes in slightly lower. And if it doesn't show up that way, that could just push the whole pivot out, the mindset of the pivot out even further. So just realize there's a lot of risk here. And I would just say finally, go ahead and do what you want, but I would just be careful and just be prudent until this news hits, especially the election. If you want to say something like the election, if you get through the election, you want to do something in front of CPI, fine. But I still think even CPI, depending on how it plays out, could be also a big mover. Ryan raised that as a good point that I kind of forgot was coming out this week. So just be cognizant of all that. And I think we're finally going to be, after this week, finally be in that spot where we'll have some good action one way or the other that hopefully we can trade for just longer than a single, right? We can get some doubles and triples and home runs in the final, say, 6 weeks of the year. As the seasonality suggests, we should be able to, even if it doesn't work out and there's a whole nother leg that begins to unfold, that could be really so great trading opportunities and in sizable moves. So thanks for tuning in. I hope something I've covered this week will help you out during the week for you. And just stay prudent out there, stay nimble, stay safe, and I'll see you all through updates and so on and so forth. Thank you.